Let's get this started. Today we're going over breaks and understand triggers on you actually getting into your trades. The market, different stocks are jumping, news is
Nico, you're
going
breaking
on.
up.
How about
You're
now?
going in and out again. Sorry.
News is going on and you're trying to catch, but you don't want to get caught into a false breakout. The price fails to continue to break the resistance. Take a second and make sure that we see price break above our resistance and close above. This first breakout that we see is an example, a clean breakout. It shows volume and it confirms that move. We would enter once that big body candle right there closes. If you enter while that candle is still moving, right? The time hasn't elapsed. Let's say you're trading on the 1 or 5 minute, candle closes, you can start to see a wick. That means the body starts to get smaller. When that occurs and you buy when it had a big body, you're starting to lose money. So you want to be careful with buying in during that candle still in closing. Wait until the close to confirm that trend and that the buyers are in control. You guys still with me?
Yeah.
Yes, sir.
Perfect.
Yeah.
Most traders, these are things that they don't know. Over it briefly. The close is the trigger and it's not the wick. So seeing a wick does not give you a reason to get into the trade. It only shows you where price has visited. The body of the candle and where that closes is your confirmation on where the buyers and the sellers are. If you see a candle, a big body candle, and then a very big wick before it closes, that means price was very high at the top and came down. So the seller stepped in. The next candle can potentially be a red candle where price starts to come down because of the sellers. If there's no volume, a big body candle, no conviction. So you compare the break candles volumes. So you're going to see those candles over and over. You'll start to see, okay, this is a big candle compared to these last 5 or 10 candles that is showing more volume, showing a clear direction or clearer direction. So as you see price gradually going up, just like in this scenario, bigger, that shows the buyers are in full control. Real participation leaves a footprint. Low volume alone and are quick to reverse. That's those false breakouts. If small candle. It's you chasing the trade. Buying the stock is going up and it breaks your resistance. Buying as soon as price breaks above your resistance means you're paying the worst price of the move with the least warning if it fails, because you're paying more for the premium. Waiting for a pullback that holds that level, so your resistance now becomes your support, allows you to buy it at a lower cost, tighter spread, and a better defined entry. Timing, the first 15 minutes. I know sometimes as soon as market opens, we want to get into something. We feel like we have to be busy, so we have to be in a trade. The reality, patience pays more. The first 15 minutes lies the most. It's easier to get caught in those traps. I'm sure you've seen it over and over. You see market opens 9:30, first few candles green, looking crazy beautiful. Like, oh, it's gonna fly the whole day. And then all of a sudden you see it engulf all those 3 candles, showing the sellers took over, right? So the first run does not mean that is the direction. You can wait in better opportunity when you're getting and that volume and momentum. The psychology portions of trading. I'm not even gonna lie. So let's say price, right? And it's starting to run up, going up, going up, going up. The cycle 150, 200, 350, etc. Those are numbers that price likes to go to. It's like a magnet. Round numbers are magnets, they're not walls. So big round strikes gets there to trigger stops and fill retesting orders. Then they reverse. So a lot of times you'll see, okay, it's about to get to 100. And then you're like, dang, so that means it might get to 115, 110. Let me get a 110 strike. But in reality, price has to psychological number, that 100, and continue in order for it to get to that 110, 115, etc. So you need to see price break above that psychological number before you're getting in. Same concept with the resistance. Winning the direction isn't winning the trade. I want you to remember this, especially with options. Winning that direction is not necessarily winning in the trade. On the first confirmed breakout, premium often starts to expand. It gets more expensive right into that move. So when it's happening, the big move, that's when it's starting to expand, right? Chasing that breakout candle means you're paying the most expensive price for the entry setup. A one candle pullback. So that means price is going crazy, running up. It breaks past the resistance. One nice candle going right back to the support makes it way, way, way more profitable and much more of a higher probability for that trade to play out, right? It's a meaningful improve your entry costs. Next up, liquidity. I want you to watch this. Watch the spread, not just look at the charts on TradingView, Robinhood, whatever it is. You're not just basing your trades on Robinhood, just like, right? Watch the spreads on these contracts that you're buying on the stocks that you're looking at. If the bid to the ask, so that means where it shows that range when you're trying to buy a contract, on that contract widens as price starts to break that level, size is getting thin. That means volume is starting to decrease, and the move is more likely to go down, to reverse. A tight spread, let's say a $3 difference, let's say the contract is from 97 to 100 or 95 to 100. It's a pretty tight spread. The bid is 95, the ask is 100, not too far. But the moment it's 50 to 100, that is crazy. You want to be careful with those moves. A tight spread on the break is a sign of real participation. It's more confidence in that trade when the spread starts to get tighter. Give it 3 candles when it comes to structure. If price hasn't followed through within 3 candles of breaking a level, such as a resistance, a key level, right? Treat proven otherwise. Prove otherwise. So winning breaks tend to keep moving immediately. That stall and chop, so that's where you see a whole bunch of doji candles after it breaks, are the ones that reverse. You're going to notice it too. Time frames have to agree. I want you to really, really, really write this down. Time frames have to agree. A break on the 1-minute chart means a little if that 5-minute or the daily level nearby hasn't broken also. Always check one time frame up before trusting the signal on the one you're trading on. Instead of, let's say you trade on the one and that's it, right? You have to look at a bigger time frame, let's say a 5, a 10, something bigger. Pick to see what's going on, right? You can't only see what's in front of you. Let's say, but then you zoom out down the
Break
street.
up, Nico.
You hear me now?
Giving you a chance to enjoy the moment. It's here in Atlanta.
You guys hear me?
Yeah. Yeah, look,
What did you
yeah.
guys last year?
Yeah. When you said that you on a one time frame, you was on a 1 minute, then you go into a bigger time frame, and then it kind of went out.
Okay, so when you're on a 1 minute, you have to go in bigger time frame to see the bigger picture. For example, right? You can't only see what's in front of you when you're driving, right? I mean, you can only see what's in front of you when you're driving. And you can zoom out, right? And you see that there's traffic 30 minutes away, 20 minutes away from where there's going to be some heavy traffic down the road. If you can't zoom out and see the overall You're only gonna see what's happening right now. Right? Does that make sense, guys?
Yeah.
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 Perfect. We're gonna go over a few scenarios when it comes to breakouts, false breakouts, and knowing when you should be entering into the trade. So this first scenario was a breakout with volume, and we would wait until that candle closes before we enter. This one is a bull trap. The wick went above the resistance. Let's say that resistance is 100. It worked off, started to come back. It failed. So price looked as if it can continue potentially, but could not and was not strong enough to continue that trend. So you want to be careful with price getting to a resistance, an area that it failed before and then failed. This one of the highest probability entries, which is the break, then retest. So price breaks above your resistance, right? In this case, we have 100 again. You don't chase. You wait until price holds that support now. So that resistance of 100 now became support. So you see those two red candles in the middle, guys?
Yeah.
Right? That's where price came down after the break above the 100 to see if price can. If it would have went below the 100, that means it failed to hold as support. Since it held, our entry would be price starts to continue $100. This is the best entries when it comes to high probability, right? The retest is the highest probability entry.
You still gotta wait till that
Say it
candle
again.
close too. You still gotta wait till that candle close too.
Once the candle closes,
All right.
it closes above 100, note it, don't chase it. Price pulls back and holds 100 as support instead of, remember that closure matters, where that candle closed. And closes back up. This is the gap and go. You'll see this a lot of times when market opens. So market open,
Yeah, we losing you, bro.
claw back, and it just starting to fly.
Can't hear you, Nico. It's getting bad.
And this is, say it again.
Lost you.
We lost you. It's getting
Oh.
bad. I don't know. We lost you a lot.
Let me see if I
I heard gap and go, and that was it.
gap and go.
Yeah, that's all we heard. We didn't hear what you said before gap and go.
All right. So the gap and go, this is one of the best ones that you'll see when market. You said you heard it? Can you hear me?
Yeah, we can hear you now.
Okay.
Yeah,
So the gap and go, you'll see this often when market opens. So you'll first see market open, stock starts running up, and then all of a sudden you see it pull back, maybe around 10 o'clock. And then for a while, it just starts running and running and running, breaks past the previous resistance, right? Your entry would be the base that holds. So that would be the area where price originally went to at the beginning. So where did price run up to? Pull back. That'll be your area that once price breaks that resistance, you would enter. Does that make sense, guys?
Yeah.
Gaps open well above the prior level. Exciting, but unconfirmed. First pullback gives back a big chunk. So I'm sure there's a plenty of times when you're in a trade and a gap and go happen where it ran up, pulled back, and then it went crazy. You're like, damn, this shit just still going, right? But during that period of it going back or pulling back, depending on how much it pulls back, it could take a lot from your contract. So you want to be careful with your strike prices during these times. Your entry would be once price stabilizes and holds above the prior base, which was the first resistance. So enter once price breaks below your support and closes below that support. Let's say price gets to your support and wicks down there. That does not mean that price doesn't always mean it's gonna continue, right? It has to be the close of that candle to give you a confirmation that price will continue that downtrend. Has anyone ever seen these? Price drops below the support and then gets more aggressive.
Yeah.
Right? It'd be nasty, especially in this market. The break that had no buyers behind it. So in this scenario, you would avoid, because this is where volume starts to decrease once it gets to that resistance, right? We have a body this time, not just a wick. We have a body that is currently above that resistance, but it's a pretty small body. Not a lot of volume. So no volume behind it. And the prior candles to that were small body candles. The buyers were there, but not aggressive. So now you see price hit that resistance and then come right back down. So that's that break that can't hold because there's not enough volume. A box breakout.
So Nico,
Energy storage.
Nico, go back to that.
Go back to
So
6. Yeah.
yeah. So your entry on a short would be that second red candle.
It would be the second red candle, correct?
Right.
Because you want to make sure that it holds. You see that we still got aggressive red candles. The second one is an aggressive big body red candle also. This is a box breakout. So you see prices ranging. So the high, so you can see this sometimes also, this is what an open range breakout that traders will do, where they'll mark the 15 minutes, the first 15-minute candle, the high of that candle, they'll mark the low of the candle, and that is the range that they're worried about. Once price breaks either above the high of the candle or breaks below, not just wicks, we already know that we need to wait until it closes above or below, right? Once
Ask
price
a few
breaks
questions.
above
You
or
have a second?
below, yep, once price breaks above or below, then you can get your entry. Go ahead, you have a question?
So, are you trading? Do you trade on a 15-minute, or are you trade on like a 5 or a 1?
1 minute, 1
1
and
minute.
10. 1 and
So,
10.
so basically, when you see, so when you're looking before you enter, I guess that means you go from a 1 to a 10.
Yes, I
Okay,
jump onto the 10-minute so that I can see, okay, I see the 1 minute that's playing out, but I want to make sure that this is a real trend that's going on. Because 1 minute of a candle going up is going to be less likely to be confident to get in versus a big body green candle that's on the 10-minute.
that's true.
Does that make sense?
Yes, sir.
Because it takes 10 candles on the 1 minute to confirm. That's a more clearer trend showing for you. So in this case right here, the box breakout, you can use, for example, the open range breakout. Once it breaks above our support, above our resistance or below our support, that would be our entry. Once the candle closes above, once again, also, you are not a wick. We're waiting until it closes. Next is the opening range breakout. Wait past 10 o'clock, waiting 30 minutes. The post 10 a.m. break of the opening range confirmed. So the first 15 minutes are full of noise built to trap early movers. The real signal usually shows up after 10 a.m. And don't forget, 10 a.m. is normally when we get reports. Once the opening range has actually been tested and held. The mechanics of this. The opening range is set in the first 10 to 15 minutes of the session. So you mark it. Range high gets tested again just after that 10 a.m. mark and it holds. Your entry on that post 10 a.m. close above the range, not the 935 jump up when price first starts to open, when market first opens. So wait. Till price is trending. And mark where price is trending. If it's trending down, trending up, and you can put a trend line across it. Each time you'll see it, tap that line, right? And then once price finally breaks above that trend line, right? If it's on a downtrend and it finally breaks above that trend line, in order for you to enter, you want to make sure that it can actually continue. So the break that just gets past it, you're not going to enter on the first candle. The second candle to confirm that the buyers are still there. If not, you're going to see a candle. Instead of this one candle that says enter confirmed, you'll see a big body red candle and it goes right below your trend line. Back again, it revisits. So we're going to wait until it confirms that it has turned around and broke that trend line. This is the last one. Round number fake out. In this scenario, the first touch is a trap. So let's say price is at 94, 95, or 97, sorry, right? It's running up. It wicks all the way to that 100, just a little bit above it, and then comes down. It doesn't break above it, comes down. And then the second attempt, and don't forget,
You
there's
went
no the
out.
third time's
You
a
went.
charm.
You
Be the
went out
second
on
time,
that
the
line. You went out on that line, bro.
first time. How about now? Got me? All right, should be better.
Whenever you struggle from
Yeah.
keyword recipe,
All right. Round number fake
Yeah.
outs. So price wicks up above the 100, comes down, and the second attempt is where that breakout happens. But I want you to remember this. There's no, oh, the third time's a charm, the second time's a charm, the fourth time, not at all. The next time could be the sixth time's a charm. That it finally breaks above. Okay. Any questions at all on these? Any questions? Any questions?
You go. You mark the first 10 or 15 minutes of the when the market up.
So I like to mark the pre-market highs and lows to see where price is going. If you're
Okay.
trading off of price action, I'm also watching to see if price can get past that area. So once I
Okay.
see it, I don't know, you can mark it to make sure that you remember it and see it. But if you're familiar with the number, like you'll hear me say, oh, we're back at the same level again that we've been seeing for the past couple of days, right? Then that number's in my head, like I need to get past this certain level in order for price to get past. But you'll see that green line or a red line that I marked on there, like oranges, to show those levels.
Is it cool to mark the pre-market high, pre-market low, and previous day high and previous day low?
Yeah, those are important levels. Those are areas where price reversed. It struggled to get past that area and turned around. So once it revisits it, you want to see, can it finally break or is it going to struggle again? That's the weakness, those levels. If it
So I
can't break
shouldn't
past those
implement
levels, then it's going to.
if I already had that marked on my chart. I shouldn't implement nothing about the first 15 minutes of when the market open, right?
I mean, you can still do that because now you have, there will be times where the pre-market high is that same level or around that area where
Yeah,
it reached that first 15
you're right.
minutes.
You're right.
Sure, you've seen that too. And it'd be like a textbook perfect thing. I'm like, what in the world? They really like this
Yeah.
price area.
Yeah, you're right.
Turn around like, yeah. So having both can sometimes line up and be a double confirmation. Like, yo, they really, really hate this price area. They like this price area, but they don't want to see it go higher than this right now. Or even the support, right? The pre-market low And then that support, once you mark the first 15, that could be that area where price bounces. But just because it bounces from that area doesn't mean you can't revisit it and then retest to drop down below it. So are we entering when the candle closes or a little bit before it closes? Anyone can answer. Are we entering when we see the wick,
Hear you.
when it closes? Go ahead, someone was answering.
When it closes.
Perfect. Once the candle closes, confirm, because if we enter before it closes, we could see a big wick or we get a real direction. No one won. You can't jump in while they're still doing the tug of war, then you're cheating. Today also, I want to do you guys a favor. Since y'all did me a favor. There's a boot camp lesson that I wanted to go over. It was a side mission that we did. I wanted to have you guys jump in, but I wasn't going to be able to have early notice for it. Now, this side mission that I made, it's similar to what we did just now, the guide when it comes to breakouts. But I want you to bookmark these, right? This shows candle patterns and chart patterns also, right? You can use this as a reference, save it. This shows the example of the candles that we see, right? So let's say the open is all the way at the top, the close is all the way at the top. This candle is bullish, very bullish. That means who's in control, guys?
Buyers.
Buyers.
Buyers. Nico, if you're talking, we can't hear you.
The buyer's in complete control. No break. Now, when we start to kind of move it a little bit. Let's see. Let's get a wick here. Let's see if it shows it. Nope, not yet. This candle right here is a shooting star. It shows that price was originally all the way up there at that 100. And when it finally closed that candle, it came down. Has anyone ever seen this?
Yesterday.
Sick.
Yeah, Circle did the same thing on a Friday while I was trading. I was like, yeah, Circle did the same exact thing. Broke out. It was a fake out. Came out, came back, and kept going down. So I'm like, yeah, definitely.
So that's a shooting star. We got a red, right? So we see a downtrend bearish, drops. All right, next up, let's try this one. Oh, hold on. Have you ever seen this candle right here?
Yeah, it's a hammer, right?
Pan
Yes,
bar.
sir. This is a hammer, right? So we see that price dropped during this candle at some point all the way to that low. But the buyers said, whoa, chill, fam. We got this. And ran it all the way back up. Right? So price
Call a
came
pin
down
bar
and
too, right?
came up. It would be considered a pin bar also, correct? So this hammer itself, though, showed they're both considered bullish moves where price that run up. Actually, pin bar would be the opposite, I believe. Hold on. Let's see if I have a pin bar in here. Maybe not.
I thought they both was pinballs.
No.
Like,
No, it's not gonna give me a pin bar. Let's see. No, it's not gonna give me. Nope. No, it won't show me a pin bar, but it has two examples, the hammer and the shooting star. But no worries. I added this to make sure that you can see the other strategies also that you'll most likely see in the market. There's a few. The hammer, the shooting star. It shows what it is, bullish and bearish. So you'll see these actual patterns in the charts, right? The doji. What is a doji, guys?
It,
Indecision, right?
yeah, nobody winning.
Correct. That
Indecision.
is correct. It's that tug of war, no one's winning. So they're trying to still figure out direction when you see that doji. A bullish engulfing, where you see a big body green candle right over here, engulfing a previous doji, for example, or a previous candle. So showing that the buyers have stepped in and now have control. You'll see that very often.
So this, by the way,
Say it again.
do you have the link for that doc?
Yeah, I'll post that one for you guys too.
Thank you so much.
No problem, no problem. And then next up, this one's pretty lit. It shows chart patterns and the breakdown where you would be entering also, right? You see that the head and shoulders at the bottom, the very bottom, you see these dotted lines. That would be your support. Once price breaks below that support, would we enter if we see a wick, guys? Below the support, would we
No.
enter?
Close when it closes.
Closes.
Nah, you're gonna
Perfect,
close
right?
above.
We wait. Perfect. Price has to close below that support in order for us to see that continuation of the downtrend. Next up, an inverse head and shoulders, just the opposite. You'll see price struggle to break above twice, right? Those will be considered technically the body of it, kind of. So that's our resistance in this scenario. Price taps it, comes down, taps it again, comes down a little, and finally breaks. And we wait until, right, with strength. So we got that big body candle there. We wait until we have a continuation, a double top. You see price tap this time, the same area, the resistance, right? And then we also see price that has that support at the very bottom. Once price breaks below that support, we would catch the downtrend on that scenario. The double top, of course, there's a double bottom, the opposite, right? You see price hit that resistance, so it was falling, falling, falling. It came up a little bit, started going up a little bit. You see the few green candles. It hit a resistance. It came down a little bit and then went back to that same resistance that we struggled to break past and finally broke with strength. We would wait until that candle closes and catch that continuation breakout. You'll see these scenarios while you're trading. Ascending triangle, descending triangle. The ascending triangle, a breakout. The descending, of course, a breakdown. You'll see it over and over. Area, that's your support. Once per entry. Now you'll also notice that on this descending triangle, the highs are getting lower, but the lows are the same level. Does everyone see it?
Yeah.
Yeah.
And then on this opposite one, the ascending, the lows are getting higher in the scenario, but we're still hitting the same resistance on all three parts. Next up is the symmetrical triangle, kind of similar. You'll see those lows starting to get higher, but you'll see the highs getting lower in this scenario. Once price breaks above, I would say this high, you can get into the trade once it breaks above that high. So you would mark that high. If it doesn't, then of course you see price reverse. This is one that we'll see often. We saw it on NVIDIA on Friday, a bull flag. You see a nice crazy run. Price running. Pulls back and it shows a flag on it. Right? And then we get a nice continuation. You'll hear Dread all the time. Looks like it's flagging. Or GQ sometimes too. It's look like it's flagging. They're pointing out a bullish flag where price can potentially continue that trend. Once it's above that resistance and we get a close above, it's showtime. You'll hear us say, that's why you'll hear me sometimes say, buckle up, get ready. And all of a sudden you see a crazy breakout. You're like, what is this guy seeing? Bullish flags, bear flag, the opposite. Prices dropping, 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 went up just a little bit, but then an aggressive drop. That is that bear flag. A cup and handle, pretty cool, where price gradually is coming down. It kind of finally finds a support and it kind of goes sideways and then gradually starts going up, right? That high of that run up is at the same area where it dropped from. So that's where you get your cup. And then the handle is where price comes down a little bit. So we got our resistance, of course. It came down a little bit and then broke out past that resistance that we had before. And that's our nice breakout. Rising wedge, falling wedge, kind of self-explanatory. You can see the wedges as we see the higher highs and higher lows. The price couldn't break above and failed. And then that falling wedge, right? We get lower highs and lower lows in this scenario, but then price starts to curl and gets above this high right here. This is scenario 12 for the falling wedge. Any questions at all?
I got a question, man. Show me, like sometimes you call something out, it look good on the chart, and I might get in behind you, but um, I don't stay in my trade long enough, and once I start seeing red, I just like panic. And then like 15 minutes later, the shit up is 100-something%. You know what I'm saying? Can you
So
show me
that's
what?
the scenario. That is, hold on. To be honest, our break and retest what we were originally on.
Yeah, I be in profit, then I see the profit going down, and I probably need to stop looking at the profit. You know what I'm
Yep.
saying?
But
Push it to the
so what'll happen is the oh, I didn't post it. I got you. Oh, actually, I posted in the Zoom. All right, so this one is our break entries, right? So you'll see where, let me find a retest scenario. This is that scenario that you're referring to. We get our break. For me, I know that you guys are falling after me. So in order for me to know, hey, let me stay in this trade, you'll hear me say, we need to stay above this area in order for price to continue. Have you ever heard me say that?
Yeah, I've heard you say that. Do you got the cursor on a certain position on the screen, or are you just talking about this resistance level?
The resistance level. So we see
Okay.
that 100 as the support, right? Price broke the resistance. I got my entry. And there will be a lot of times where you guys are like, Nico's up 50, but I'm up 70. I'm up 80, right? Because you got
Mhm.
in during that retest. You got in during that retest and price held the support. As long as
Or
price
eight,
held
or
that
eight
support,
the money,
say it again.
or ate some of the money.
Yeah. So that's why you'll see some red right away, right? We'll see a pullback right away. As long as price holds that support, you're good. Price continues and you see those nice big body candles.
Even after that, Nico, like you see where you got the inner, right?
Mm-hmm.
And you go up those three bars. It'll pull back some still then you be thinking like, hey man, this might be finna go the other way or something.
But remember this, right? We have our support level that we're worried about. As long as price is staying above that support, the buyers are still in control.
Say less. My last question. Sometimes you post and say risky play. You know what I'm saying? What are you really meaning about that? You know what I'm saying? What do you really mean?
The strike, the strike is far. We're choosing. We need a big move in order for us to see money on this. Um, It could be SNDK, MU. It could be something I haven't traded in a while and I'm not as used to trading those strikes. So now I'm trying to see, all right, let me put this strike to see if price plays out. Because you could choose any strike, but not every single strike is going to play out, right?
Gotcha.
So sometimes so when I'm doing that and I put risky, if you're putting a further strike higher than that, now you super risky.
Gotcha.
Because it needs even more than I need it to do just for you to really start making money. So you need to see a big body candle. So anytime you're following anyone at all, if you choose a strike, you're like, oh, let me trade based on my budget instead. I can only spend 100. They spent 200, 250. Let me spend 100 instead. So you choose a strike based on your $100. But that strike is maybe $10 higher than where we bought our strike. So now you need the stop to go up crazy in order for you just to see green. If not, it's almost a flat line where you're starting to gradually lose money. So anytime that you're joining a trade, also, you have to also notice, hey, what strike is it that I'm choosing? And is there volume on the strike that I choose? If there's low volume, you can start to lose money.
So let me ask
The
you
spread
this.
could be fast.
Back over there where you got the inner reclaim, the inner, the retest where it closed above, right? Say if it's to
Yeah.
go up about 4 or 5 candles, and I need to start taking profit then and just get back in the trade, or just leave, just take all of them out and just leave a runner.
Here's the most important part that you have to really also understand, right? The goal isn't really honestly to get 150% every single trade. It may not happen. Maybe not 100, maybe not 80, maybe not 60. So what if every trade that you get that sees green sees at least 30%, right? But some of
Yeah.
them see home runs, 150, 200, 500, 800. So now if you're taking some money off the table when it goes to that 30, if it doesn't make it past the 30%, you saved yourself from losing some more money. So scale out. When you see that run, that big body candle, and we're all excited, yelling, "Oh shit, what was that?" Take some money, start selling some. It's much harder when you have one, because now you're hearing all excitement. You're like, "Damn, can it keep going? Can it keep going?"
Yeah, I get you.
But if you have multiples, you say, "Oh shit, I'm up 80%, I'm up 100%. Let me take one off. Oh, I'm up 130%. Now I'm playing with the house's money and I'm green no matter what. But I want to see 1,000%. Okay, you got one that you're playing with the house's money. If it doesn't play out, you're still good,
Sounds good. Sounds good.
right? That risk management is the most important. That's how we survive. But if you full port and then you have no risk management also completely on top of the full porting, because that's already no risk management. So if you're not taking the profits on them when you see it, then you're shooting for 100 million%. You're like, oh, it's not enough. But you just doubled your money. It's not enough. So what do you want? What are you looking for? I want price to trend up higher. Okay, there's no more big body candles. So now you're losing money holding on to a trade that's green.
Yeah, that was my problem, man.
No worries. It's just like the EOD trades. Like sometimes we'll see a big body candle at the end of the day. So someone can make some crazy money on the calls or the puts. But if it's small candles and it's just trending, nobody making no money. The calls and the puts are getting cooked because no one's getting direction. So if you sit in it, hoping and waiting, yo, we got 30 minutes, let me see. We got 40 minutes, let me see. We got 20 minutes, damn. But you're waiting for a big body candle to come up to save the contract. That's the reality of it. We need a big body candle for it to actually play out. But you're paying time for you to sit and wait.
Do you remember how much you was down in that SpaceX before the market closed yesterday? Before you got that
SpaceX?
spike? Yeah, because it was going down. I jumped up out
Oh,
of
the
it.
SPX?
Yeah.
Oh, the SPX is yeah, let me see. I think I took a screenshot too.
But you was down, we was down, and I jumped out of there, but you stayed in. Do you know how far you went down?
Let me see right now. I think it was like 40, 50%. Hold on. You remember what time that one was at?
It was close to it was at least about 3 o'clock. Between three, yeah, it was about 3:30 or something like that.
Oh yeah, it was at 242, and they went to 100 and something percent, but they went down 60% at one point.
Yeah, I got hacked. And it wasn't even moving. It was just it was just the time decay. At the end of the
So,
day, it was
so
beating
think
me
about it,
up.
right? The strike was so far. Look, you see how many I bought. I bought a bunch just in case I needed to
About
scale
eight,
out
right?
during those spots. Yeah, about yeah, seven of them, right? So what I did was, as the price is going up, I put sell orders for these prices higher than where it is. So anytime it spikes, instead of me going in and say, "Oh shit, it spiked," let me go ahead and sell. It already auto sold. So during the EODs, you have to be quick. Instead, be quicker than it. All right,
Yeah.
at least let me get something. So let me put my premium at this. Let me put my limit price at this amount. So if it's at $10 we were buying them for, if it goes to 17, I made 70%. Boom, automatic sell. If it's at
Yeah.
23, boom, automatic sell. 25, automatic sell. Versus, let me go ahead and manually type in point,
Yeah. Gotcha.
and then let me swipe up. By the time that happens, that candle's basically went from body to wick,
Okay.
right? So in order for you to sell during those moves, you got to be quicker than the move in a sense. You want to say, hey, where can price really go? These ones, I didn't think it was going to go to, I wouldn't believe that they would go to 100, 200, $300. So I wasn't putting sell orders for 100, $200. I'm putting them in $20, 17, 18, 19, etc. Right? So that if it goes up and doubles, okay, I just doubled the money. Imagine out about 100, 200, three of them, 300. Double our money, sell, sell 70 of them, 80 of them right away, and then leave the runners to see if they go. If not, I already made more than enough. So the trades, they got to make sense when you are taking your trades. What you do now, also pretend like you have $1 million portfolio. If you got $1 million in your portfolio, you're not going to put half a million, a quarter million on a trade. That's for sure. You're going to think about more of what your trades that you're getting into. You're not going to just throw money out just because you got it. You have to get there some way by building it up. So the strategy that you do now has to make sense even later. Am I doing the right risk management? Am I over trading? Am I watching a trade go to 100% and then not selling it? Let's say you had a $20,000 trade and it went up 100%. You made $20,000. You watched it go up and then go down. You can't do that. That's 20 bands. The percent start to grow when the portfolio grows also. So the amount that you're making grows with that percent as long as you're focusing on the percent. But if you focus on the dollar amount, you're like, oh, I'm going to sell at 500. Oh, I'm going to sell at 200. As your portfolio grows, let's say you got $100,000 in the portfolio. You're like, I'm going to sell at 200. I'm going to sell at 300 because that's what you were stuck on when it was lower, right? But let's say the opportunity is 50% on the trade. You spent 5 bands, but you took 200. You spent 3 bands, but you spent 200, but you made 200. Focus on the percents versus the dollar amounts. Promise you'll go way farther, way farther. That's one of the biggest changes when it comes to your trading. But y'all, I'm about to jump off. I'm horrible with buys, but y'all have a wonderful day. Enjoy your weekend. We got a public Zoom tomorrow. All right, y'all.
Have a good one.
Yeah.
That's bless.